All right, let's break it down. We're going to talk about the SPY. The SPY is the ETF for the S&P 500. Recently tested a significant area of resistance and has started to fall from its 200-day moving average. So I want to kind of discuss the chart, discuss the technicals, discuss the fundamentals, give you some of my thoughts, take them for what they're worth, whether you are able to use those thoughts to reap you some benefits. I hope that's the case. But if not, at least hopefully it should give you some insight to at least reading the market. I really, my students that work with me every day, they they join me for 3 hours from 8 a.m. to 11 a.m. every morning. By that time, I've had a couple cups of coffee as we get through the morning session, and we have analyzed a market for 3 straight hours. We've identified where opportunities are. We've identified where uh, there's low risk opportunities, where there's higher risk opportunities, what those things look like. So we're going to do it today. All of us here, we're going to do this on a daily time frame. So this is a chart of the SPY. The time frame that we're looking on is 1 day, meaning each candle represents 1 day's worth of price action. So you can see we obviously had a run here to the upside. Market clearly, rallied after we kind of placed a COVID low here. Market had its longest bull run in the history of forever here, reached higher numbers than we've ever seen. The SPY had topped out right around $480. We're currently trading about $100 below that, $90 actually. We're at 389 ish. Currently. Now, we haven't closed out the week. I'm shooting this video on Thursday evening. It's, what time is it? It's about 7 p.m., just winding down for the day, and just kind of wanted to talk about what I'm seeing here and what could be on the docket next. Because listen, it's all fine and well to interpret what we see today, but if we don't know what's to happen likely next, then what good is the interpretation? So we knew we had this big rally up here, and what you have is your 200-day is the purple, and your 50-day is the pink. And you can see for the most part here, you have the 250 and price above. So, you know, normally when we're in that sequence, it's, we're typically in a rallying bull market. Market it has a bias to the upside. We're looking, for buying opportunities. So we clearly placed a lower high here. We started with some lower lows. Our 200-day is above our 50. We've had some very drastic bear market rallies. As I zoom in here, we've just tested the 200-day moving average. Just today closed below the 50-day. So that's the sequence. 250 price below, that is fairly bearish. Now, we are in a short term up channel and in a long term down channel, right? So this blue channel structure is a long term down channel. This thin black structure is a short term up channel. So this is support. You can clearly see there's continued support here. And then we run resistance above the top here. So a couple things are going to happen here. Well, I shouldn't say a couple things. One of a couple things is what's going to transpire next. Price could kind of consolidate here for a period of time. Um, Ultimately break above this descending blue channel line. And in doing that, we could then run somewhere conservatively up into this area, probably the 425, 4 quarter, 430 handle area here on the SPY. Now, if that is not the case and we start to weaken and we start to break here, I'm going to show you what that looks like and what our anticipation would be if that's kind of what happens next. So I'm just creating a little channel structure here. This is nothing fancy. I teach my students how to do this. So if we tighten into this, what we call a wedge, and a wedge is formed by an ascending channel structure and a descending channel structure. So if we tighten into this wedge and we break below the wedge rather than above the wedge, we could fall back to find support potentially somewhere this week in the 365 area. Fast forwarding to February 1st, you'd be in the 362 area. Fast forwarding to March 1st, you'd be in the 352 area. So, depending on the amount of time that it takes to continue to move, would be contingent on where it would find support. So, here's our high, and here is our lower high. So, big picture, that is a bias that is similar to the big picture. Now, what's the market doing? The market is overbought as it rolls over. Relative strength is rolling over. Relative strength's rolling over. Same thing here. Everything's kind of rolling over. MACD starting to tighten up here. Looks like it's about to cross over. Selling volume starting to come in. Buying volume pretty weak here. Market breadth kind of tightened up there, but is expanding now to the downside. So we'll see what this affords us. But what's likely to happen here is we're either going to, I would say, in the next couple weeks, if the market does grind higher, we could end up somewhere in the 425, 430 area to the upside. If the market does fall lower, which is really my anticipation, because this has really been a bear market rally, in my humble opinion, we could fall towards the 365, 360 area. So time will tell. The good thing is when price tightens into a wedge or pendant, um, it ultimately has to at some point in time break to the upper downside. Like it's going to run out of chart to trade into. And when that happens, it will either fall or rally. So we see some weakness coming into the market today. We had some buying strength based off of, the change of the year and so on and so forth. You could see, here we broke the 50-day, came back to the 200, failed at the 200, rotated. Now we're back below the 50-day. This is a bearish sign. All of our odds enhancers look bearish. Again, we had light buying volume, little bit of the selling volume coming in here so far, starting to inch higher. We'll see what that looks like. Market breadth starting to get aggressive to the downside. So if we break this little channel line here, our intention would then be to test this descending support line. Big picture, if we break this little descending channel here, we could certainly go back to retesting these lows here. There's some more lows right here. So there's a couple spots along the way that we can identify support before we would then test the big picture channel structure yet again, which, for today puts us, someone down here in the 315 area. So we're a long ways away from that. We'll update you with a new video as we approach that. But I just think that we're in a pivotal area right here. Either we're going to rally above or fall below. And whichever of the two we do leads us to ultimately retesting the high up here or testing the low down here. So that's my probably 3 to 5 week horizon report card here on the SPY. From what I see on the odds enhancers, the bias looks to the downside. 200-day moving average is above the 50-day. Price is below both. Everything looks like it's rolling over. MACD looks like it's starting to roll over. Again, all these odds enhancers, stochastics, relative strength, so on and so forth, look like the bias is to the south side. Now, from a fundamental basis, look, we printed and distributed more unearned money than ever before, ever. We're facing federal default issues and things of that nature. So, in my humble opinion, the financial problems for the economy, the financial problems for the government are far from over. We got Goldman Sachs laying off 11,000 people, Microsoft laying off 10, Amazon laying off 18,000. I mean, we're going to see a broad stroke of job losses. And this is how it typically happens. The stock market takes a hit. We've seen that already. We've seen the market, equities, cryptos, retirements, commodities. We saw everything take this big hit. What follows that? Well, the jobs is what's next. Poor quarterly earnings come out, and then they start to lighten the payroll. And that's what we're starting to see now. So we're starting to see, day after day, these big corporations, big companies that are laying off a significant amount of their workforce. What happens after that? Real estate market. That's what's next. When people cannot afford their homes, particularly the homes they overpaid for during this crazy COVID boom, the real estate market's going to take a pretty heavy hit. We haven't seen it happen yet. Market's down 30+%. Don't think that your home cannot lose 30% of its value, and don't think that it cannot happen very, very quickly. Just give it a chance to get caught up. So, with that being said, posture yourself carefully that you are in okay condition no matter what happens, and do something for yourself to help yourself, because nobody's going to do it for you. If trading's your thing, I'm happy to help you. If real estate's your thing, find a real estate investor. If Pokemon cards is your thing, find somebody that knows about it that they can help you. Like, whatever your thing is, find somebody who can mentor you, who can coach you, so you can take whatever that thing that you're passionate about is and turn it into a stream of income. So here's my thoughts on the SPY. I will post a link in the video comments for a picture of this image so that you have my thoughts regarding where price action may go. If I can help you with anything, you know where to find me, anthonyspecial.com. Questions that I can help you with directly, or if you need some guidance or you'd like to discuss what coaching opportunities I offer, simply just send me an email. It's info@specialanalysis.com. Be more than happy to have a conversation with you and see if something I offer may be worth your while. And with that, I wish you a beautiful evening, and I will talk to you soon.